Hello, Teq Crypto followers, welcome to our video. Today, we will conduct a technical analysis of SAFEREUM Coin. Looking at our chart, we're currently examining it on an hourly time frame. We can see that there is an uptrend, and as long as this uptrend isn't broken downwards, we can say that price movements may continue to rise as long as they stay above this level. In addition, we've observed rapid upward breakouts at the resistance levels we marked in the past, followed by retracements. The current peak is around 155,151 levels, while the price movements are currently around 121,000. As we mentioned, an uptrend is possible. Especially if we look at the Fisher indicator, it has broken significantly above the zero level, indicating that we should consider a sell order. This is interpreted as a strong sell signal. Additionally, there seems to be a slight downward trend in price movements at the moment. The Fisher indicator suggests that the price may decline until an upward breakout occurs. Looking at the RSI value, it has been above the 50 level for several weeks, and as long as it stays above these levels, we can expect the price movements to continue rising above this uptrend. Lastly, in summary, the volume is somewhat low, so we may need to be cautious about this uptrend, as a low volume might not indicate a very healthy uptrend. To help us analyze the coins you're interested in, join us by hitting the subscribe button and enjoy investment insights prepared exclusively for you. In this video, we conducted a technical analysis of SAFEREUM Coin and share our thoughts about it. Now, let's move on to our weekly Bitcoin analysis. Keep watching. Yes, now we continue with the video on Bitcoin technical analysis. If we look at the purple line on our chart, we can say that this purple line represents a descending trend, and it broke to the upside with significant volume. After this break, there is indeed a retracement, which we can see in this part, and this is referred to as a pullback. At the same time, we can also see an ascending trend, which we've marked with a blue line. Even though this upward trend was broken to the downside, it broke back to the upside with significant volume, and price movements continue to stay above this ascending trend. Looking at our Fibonacci levels, we can see that the Fibonacci 0.618 level has been broken to the upside. This breaking point also coincides with the upper part of the Bollinger Bands, and currently, it's trading above that region. So, we might see a retracement from here, as price movements are above the Bollinger Bands, and there's a possibility for it to re-enter the band. In addition, in recent days, with the increasing volumes, we can say that the uptrend here can be quite healthy. As long as this uptrend remains unbroken, we can expect price movements to continue upwards. So, the key point here is the ascending trend, and we never want it to break to the downside. Besides that, let's continue our analysis with the indicators. Looking at the Fisher indicator, Fisher gave us a buy signal a few days ago with a nice breakout, and with this buy signal, we can see that the price movements are also rising. According to the Fisher indicator, as long as there's no break to the downside, price movements can continue to rise. Fisher indicator follows a rule: the further away from zero the Fisher value creates a breakout, the stronger it's interpreted. We can see that Fisher is currently at around 1.91, so it's quite far from zero. Breakouts in these regions can be interpreted as strong sell signals. So, it's important to be cautious in such cases. Looking at the RSI value, as you can see, it has been fluctuating around the 50 level, but recently, it has crossed above the 70 level. If it continues above this level for a while, we can genuinely say that this uptrend can rise further. Therefore, we can expect a continuation of the rise if the RSI remains above this level. However, it's essential to be cautious in these regions because news flows can have a significant impact. Regarding moving averages, with the recent rapid increases, the price movements have broken all the moving averages to the upside. We can interpret these breakouts as positive since we can see that the 8-day moving average has also crossed above the 20-day moving average, which is represented by the green line, and recently, the 200-day moving average, which is the orange line, has also broken to the upside. With this breakout, we can indeed anticipate a beautiful and positive rise. However, we never want the 200-day moving average to break to the downside because, in that case, we might see a downturn in the price movements. Sometimes we do see sharp and volatile movements in this market, especially when we look at the recent days' movements. So, it's essential to be cautious in this market, as news can have a significant impact. Therefore, it's a good idea to be careful. Additionally, short-term wise, looking at the moving averages, the 20-day moving average is currently above the 50-day moving average, which is represented by the blue line. We don't want the 20-day moving average to cross below the 50-day moving average. Moreover, the 20-day moving average is above the 50-day moving average, and the 50-day moving average is above the 200-day moving average. We don't want the 20-day moving average to cross below the 50-day moving average. If this crossover occurs, we can expect a downturn in the medium term. Short-term wise, we don't want the 8-day moving average to cross below the 20-day moving average. This crossover can indicate a continuation of the uptrend in the short term. Now, if we provide a detailed Fibonacci analysis, as you can see, the Fibonacci levels are working really well, especially if we look at the 0.236, 0.5, and 0.618 levels. They work really well. Additionally, price movements first touch the 0.5 level, then experience a retracement to the 0.236 level. Afterward, they quickly rise to the 0.618 level. The key point here is that we never want the 0.618 level to break to the downside. If such a breakout occurs, we could see a retracement down to the 0.382 level, which is approximately $27,538. So, we can say it might fall to this level. Of course, these comments are based on potential scenarios, not definitive outcomes. If the 0.618 level is not breached, we can expect the price movements to rise initially to $30,326 and, if that level is surpassed, potentially up to $31,000, $32,000, or $33,000. Also, in the market, these levels seem to work quite accurately, so it's essential to share this with you. Now, let's continue with the MACD indicator. As you can see, a robust breakout is occurring above zero, and it corresponds with a significant uptrend in price movements. Not only looking at the volume in price movements but also considering the volume in the MACD indicator, we can see a steadily rising volume. This genuinely indicates a healthy uptrend. So, unless any significant downside breakout happens, price movements can continue to rise. Of course, the MACD indicator provides signals somewhat slowly. It's not as fast as an EMA crossover, but it can yield excellent results, despite the delay in signals. Therefore, I wanted to share this with you. In summary, we have an ascending trend, and we want to make sure it doesn't break to the downside. If such a break happens, we could see price movements fall to $27,538. Additionally, the moving averages are in favorable positions and providing strong breakouts. Furthermore, our indicators are still showing uptrends. Currently, the 3-day RSI hasn't created an overbought or oversold breakout, which means price movements can continue to rise unless such a breakout happens. However, it's essential to remember that the cryptocurrency market can be quite volatile, and news events can have a significant impact. So, always be cautious. To summarize, none of the content in this video should be considered as investment advice. It's purely our personal opinions and is provided for educational purposes. None of the content in this video constitutes investment advice, so please do not make your investment decisions based on these comments. You should make your decisions, and this video's content is not considered as investment advice. If you enjoyed the video, you can click the like button, and don't forget to subscribe to the channel to stay updated on new videos. Thank you for watching. See you in the next videos. Goodbye.